I'm Rahul. I'm going to explain 10 best tax havens in the world. Offshore accounts, shell companies, tax havens. It might sound questionable, but these are all legal methods US companies and individuals can use to lower their tax liabilities. Investing through a trust or companies organized in tax haven is perfectly legal things to do. For individuals, the base tax havens offer low or no taxes on capital gains, interest, inheritance, and even personal income. Corporation can also save billions in taxes by reporting profile to subsidiaries in countries with favorable corporate tax and other benefits. The super wealthy and mega corporation stand to save billions or if even billions by taking advantage of the world's best tax havens. The number one benefits of tax haven is the obvious benefit of saving money on taxes. Luxembourg is a small European country that border Belgium, France, and Germany with a population of 550,000. Luxembourg tax haven status comes from its business-friendly law that allow international companies to park portion of their businesses there to those billions in tax bill. About 33% of US Fortune 500 companies have subsidiaries in Luxembourg, according to a 2014 report from Citizens for Tax Justice and the US Big Education Fund. Amazon, for instance, has its official European headquarters in Luxembourg and was funneling all sales it's made in Europe through its Luxembourg. The online retailer entered the practice in 2015, instead booking sales with the localized branches, a move that could significantly boost the firm's tax bill in many European countries. According to the Wall Street Journal, Amazon made the changes after the European Union opened an investigation into the tax practices of this and other companies. The next one is Cayman Islands. The Cayman Islands offer probably the biggest now for the individual as well as the multinational corporation. The Cayman are one of the several countries with laws tax allow a corporation to be formed and the retain assets without paying tax and when held for business purposes. This is perfectly legal and not a tax avoidance strategy. A stranger added, however, that the tax advantage and the implication are complex and probably best handled with the help of professional. The tax benefit can be worth it as many businesses from the US and around the world have assets in the Cayman. Banking assets in the Caymans are equal to a fifteenth of the world's total $30 trillion in banking assets, reported the Guardian. Fortune 500 companies with a subsidiary in the Cayman Islands include Wells Fargo, Pfizer, Pepsi, and the Marriott. Island of Man is the next one, is termed as the low taxes financial center, thanks to its of capital gains tax, inherent tax, corporation tax, or a stamp duty. The island, situated between the England and the Ireland, also carries low income tax with the highest rate at 20% and the total amount capped at 120,000 pounds, reported UK finance outlet MoneyWeb. Island of Man also offer great benefit for pension. Many international companies have their employee pension plan held in account in this small country due to assets protection and the ability to take benefits from the age of 50 onwards. Said a stranger, only employer sponsor retirement accounts will benefit from the tax lax code. through as individually held internationally mutual fund taxes heavily under US tax law, a stranger added. The next one is Jersey, located between England and the France. Jersey's status as tax haven rose mid 20th century when many wealthy British citizens moved their wealth to the island. Britain's inter- inheritance tax on the accounts over £1 million was 80% compared to the self-governed Channel Island of Jersey, which has no inheritance tax. Today there is still no inheritance or capital gains tax. Jersey has a standard corporation tax rate of 0%, with the exception of the taxes levied on the financial service, utility, and the property companies. This has made Jersey a popular tax haven for the UK housing $5 billion worth of assets as per square mile. The next one is Ireland. Ireland is often referred to as a tax haven, despite Irish officials asserting that their country is not one recently. Ireland made headlines when US drugs company Pfizer merged with the Ireland-based Allergen, with the plans to re-headquarter in the Ireland, reported the Los Angeles Times. This tax inversion could help Pfizer doses taxes on as much as $148 in profit hails internationally, according to a report from American or Tax Fairness. Another against American founded company that is incorporated in Ireland is Apple, which had booked over $180 in offshore profits through its international subsidiaries, dosing $59.2 in US taxes, according to the Citizen for the Tax Justice Report. They are not alone. Over a quarter of Fortune 500 companies had subsidiaries in the island in 2014, includes the Google. The next one is Mauritius. Mauritius is an island located in the Indian Ocean several hundred miles east of Madagascar and is a popular gateway for foreign investment. Mega corporation with the Mauritius subsidiaries includes JPM Morgan and the Chess Citigroup and the Pepsi, reported the Wall Street Journal. Mauritius does levy a 50% corporate tax, but companies that are tax resident of the island can take advantage of the tax breaks granted through double tax territories. Additionally, capital gains and the interest are not taxes in Mauritius Bank, making it an attractive tax haven. The next one is Bermuda. Bermuda has long been a popular tax haven. Big businesses also turn for the low taxation to Bermuda, which levies no corporation tax at all. According to Deloitte, just over a quarter of Fortune 500 companies had subsidiaries in Bermuda in 2014, according to the Citizen for Justice report. Google, for instance, has routed foreign profit to Bermuda through subsidiaries in the island and the Netherlands, a move which could save the companies as much as $2 billion a year in taxes, reported Bloomberg. Monaco, next one is Monaco is less than a square miles and has just 36,000 residents. This tiny principality has Gainsbourg, however, it has not charged its resident income tax since 1869. Those that can claim Monaco as their primary nation for residents will keep up all of the money they earn. This has drawn some of the world's wealthiest to the teeny country of the Monaco, as 1 in 3 residents is a millionaires, reported in CNN Money, and the Monaco popularity as a home to the super rich has also made it the most expensive real estate market in the world with the $1 billion. buying just 160 square feet, reported the New York Times. Taxes for the corporation are also low, drawing in the corporation like the rental car company Avis Budget Group to set up the subsidiaries in the Monaco. The next one is Switzerland. Switzerland combination of low taxes and a bank system that protects accounts holders secrecy of the else have made it popular destination for funds leveraged and overseas to enjoy lower taxes. This has made Switzerland a popular financial center for individuals and the corporation alike. Geneva, the country's capital, is the 13th largest financial center in the world and one of the most broadly and deeply established in the world, according to the most recent the Global Financial Center Index from the Long Finance. US companies have taken advantage of the Switzerland tax benefits for years. In 2010, American multinational corporation reported $47 billion in profit to Swiss subsidiaries, according to the Citizens for Tax Justice report. Just under 30% of Fortune 500 companies have subsidiaries in businesses like Marriott, Ecolab, Pepsi, Stanley Black and Decker, and the Morgan Stanley. The next one is Bahamas. The Bahamas are another top tax haven thanks to lack of the capital gains tax, inheritance tax, personal income tax, and the gift tax. All of these are extremely beneficial for the wealthy, especially to older wealthy and the people looking to limit the tax on their inheritance or to start gifting money. This tax advantage can make the Bahamas as attractive tax haven for a US corporation which reported $10 billion profit to Bahamas and the subsidiaries in 2000 equal to 123% country on grow domestic products that same year. According to the Citizens for Tax Justice, well, Fargo Bank and the energy provider AES are the couple of the 5% of Fortune 500 companies with subsidiaries in the Bahamas.